Welcome to DADS DeFi Space. I'm Kevin, and today it's a Sunday live stream, and we're going to take some time today to discuss the news, look at the markets, and specifically I wanted to talk to everyone about the four-year cycle theory and how I use it to guide my crypto investing. Before we get started, earlier today, Joe Biden, the current president running for the Democrats, this presidential election, dropped out of the presidential race. Immediately after this happened, Bitcoin just dropped quick. It rebounded minutes later. We'll talk about that in just a minute. The biggest issue here is markets do not like the unknown. And everyone, I think, within the crypto market, within the stock market, within all the markets, pretty much thought that Trump was going to beat Biden. Now that Biden has left the race, who's to say what's going to happen? So, this article from the Daily HODL dives into why Bitcoin price dropped so quickly today, which is that unknown of who's going to run against Donald Trump. Biden dropped. He endorsed Kamala Harris. Kamala hasn't really made any statements on Bitcoin or crypto, not that much anyway. So it's hard to really read if she would be good or she would be bad for the crypto markets. But at this point in time, I mean, not too many of us can argue against the fact that RFK Jr. and Donald Trump are the biggest supporters of cryptocurrency, Bitcoin, and the markets that we're all playing in right now. All right, so let's just take a look at some of the market metrics before we get started today. Obviously, we're in the bull run phase of the four-year cycle, which we're going to talk about in just a minute. Market cap is back up. It's approaching $2.5 trillion. That's Bitcoin and all your altcoins and Ethereum and everything else out there. Volume is down, but yesterday it was up immensely. I saw that within my liquidity pools. Some of them, especially my overnight pool, it was pumping like 12, 13, 1400% gains, or excuse me, APR yesterday. Crazy volume. It's kind of back down in a normal range today. The fear and greed is getting back up into the greedy range. I expect that during a bull market, but I'm telling you, if you see fear drop below the neutral range during a bull market, it's usually time to dollar cost average on your strongest conviction plays, strong altcoins, Ethereum, and Bitcoin. Moving on, I wanted to take a look at Bitcoin today. We're looking at actually the 15-minute chart because I wanted to show you that within 15 minutes, we went from around 67,500 all the way down to, say, 65,800. We wicked down below 65,900, which is crazy. Okay. Next, what we're going to look at is prices. All right. Looking at prices, even though Bitcoin had that massive drop today, and we'll go back to the charts in a minute, we're back right up at 67,000. Pretty stable for the day, up almost 13% on the week, which is nuts. 9% of the week on Ethereum, 11.3 on BNB, 25% on Solana, which I did rotate out of a little bit of my meme coin pools into USDC and Solana. We'll talk about that a little later. Dogecoin, 25%. TONCOIN actually is down a little bit this week, but that's okay because I'm going to buy a little bit because it's one that I have high conviction in, and I'll talk a little bit why later in the stream. AVAX up 25%, Shiba Inu 5 on the week, Chainlink 11, near almost 20%. You get the idea. The market is on a tear, but before we move on into the news today and our discussion on the 4-year cycle, I wanted to look at Bitcoin's weekly chart, or excuse me, daily chart and weekly chart. This is the Bitcoin daily chart. I'm going to zoom out just a little bit here, and you can see we have we're working on our 3rd day of support off the bull market support band. This is when it's time to get serious in the market. Hopefully you've been accumulating in this low range when we drop below the support band, and now you should be sitting a little bit better. If not, that is why we dollar cost average. And you're going to see some of the ways I do this when we look at the 4-year cycle theory in just a bit. Now we're going to look at Bitcoin's weekly chart. Now, this current weekly candle is above the bull market support band. We have closed one candle and got the wick right above the bull market support band, but we have not. I personally would feel so much more comfortable. I would feel more comfortable if Bitcoin had another weekly candle or two above the bull market support band. And I think you would too, especially your altcoin bags. Moving on, I wanted to touch on a couple more news events before we get into our 4-year cycle discussion. This next news article concerns the Matic token, or the Polygon layer 2, or well, it's not really a layer 2, but we'll get to that in a future video. But Polygon Labs announced that the Matic token is officially going to rebrand to POL, or POL, in September. Now, this is going to be a massive technical upgrade to the Matic network. Yes, I do hold a little bit of Matic, although the majority of my Matic position is in a Matic Bitcoin liquidity pool, and the rest of it is in an Ethereum Link liquidity pool, which I'll show you. I'll show you a couple of these positions at the end of the video. If you want to stay to the end of the live stream. I also apologize for starting late today. There's just too much going on with my children. And then also I want to apologize for all the different expos that said, hey, it's starting at this time. No, it's starting at this time. No, it's starting this time. I'm probably going to go to just picking 2 days of the week to do these streams, and it's going to be difficult for me to determine an exact time to do them. But I'll try to make it known to the best of my ability. Going back to the article, Polygon Labs announced that their Matic token is going to change over and rebrand to the POL token in September. They have a massive technical upgrade. Basically, what's happening is the POL is going to become the blockchain's native gas and staking token. Okay. Part of this is they want to unify their liquidity within their network, but we'll see how this affects Matic's or POL's price, and we're just going to have to wait and see. Again, most of my Matic is actually in liquidity pools. Most of it is either on Camelot or Uniswap, but we'll look at that in just a minute. I also wanted to take some time before we get into the four-year cycle theory today, talking a little bit about Telegram. So the messaging platform Telegram is launching a mini app store. This mini app store is going to have support for Web3 pages. To me, this is big, and this is part of the reason it's my thesis of why I'm investing some of my capital into TONCOIN. Now, TONCOIN has not been a great performer over the last few weeks, but that just gives me more time to accumulate. So the mini app store that's run inside the Telegram app, I personally think this is a way they're trying to get around the Apple App Store. And it's almost like they're trying to become an all-in-one app system. So we have seen Telegram's coming out trying to be an all-in-one app. Ton Network is being integrated into Telegram. The Ton Network is seeing huge adoption of people coming in, along with the amount of people coming into Telegram. To me, this sounds like the Ton Network is going to grow, and grow. So this is one that's going to have to be at least somewhat in my altcoin bag, but be realistic. The TONCOIN has a huge market cap. If we go back over here, let's look at TONCOIN real quick. The TONCOIN is right now at about $7.12, and our market cap is quite a bit, actually over 17 billion. So it's happening again. This is part of being dad. All right. So getting right back to it. We're gonna load the TradingView TON chart. I'll get back to my market cap discussion that so rudely got interrupted by the children. Hopefully you're not hearing them too much in the background. E5, and then the top of the range is about 828. If we use the candlesticks, we're looking more at about $7 to 817. So as long as we're within this $7 range, I'm buying up my TON or adding into my TON BNB liquidity pool. We'll look at that in a minute also. All right. Enough about TON, enough about the growth of Telegram. Okay. And I want to get back to my discussion of TON and it not, I don't see TON reasonably being a 20x or 50x or maybe even a 10x this bull cycle. I just see it as a strong project. It already has a large market cap. This could be a coin that we can get a good 5 to 10x on. Not financial advice. And it's one that I feel comfortable putting at least a teeny little bit of my capital into. All right. Now for the big part today, I want to get into my discussion of the Bitcoin 4 cycle theory. Because I think especially if you are a beginning crypto investor or you're just getting involved in DeFi markets, that if you have not heard of the 4-year cycle theory, you need to backtrack. Not everybody subscribes to this theory, but it is something that I subscribe to with my crypto investing. So what you see right here is different Bitcoin halvings. By the way, I took this from Yahoo Finance. And you can see that from the first halving, right, up to the peak of the next cycle, the Bitcoin rose 7,976%. When you look at the next cycle from the halving to the next, 2,867% from the halving to the top. And then at the last cycle, which is my first cycle, 677%. Now, one thing before we get started, the law of diminishing returns. Each cycle, Bitcoin is experiencing less and less gains. You're going to usually see this with a lot of your altcoins too, the ones that have lasted more than one cycle, because most of your altcoins are going to fizzle and die. So if you hold on to those bags, you're going to end up with nothing. Don't go through the stress of investing in these markets without taking some profits. Now, let's get started. So a little bit of background information. Bitcoin's 4-year cycle theory is a predictable 4-year pattern that's influenced by the halving event. So the halving events happen approximately every 4 years of Bitcoin's life. And this is when the reward for mining new Bitcoin, the Bitcoin miners that help to secure the Bitcoin network, their block reward for the energy they're expending is reduced by 50%. That means if they used to make, 12 Bitcoins, now they only make 6 Bitcoins with the same amount of energy. So the fact that the emission rate of Bitcoin is being cut in half every 4 years has significant implications. The halving has significant implications for Bitcoin's supply and price. Okay, so this takes approximately 6 to 12 months for Bitcoin to have this blow off top, and that length of time during the 4-year cycle varies from each of Bitcoin's cycles. Now, Bitcoin's 4-year cycle has 5 distinct phases. Now, most people will say 4, but I want to divide our last one up into 2. So, the 5 phases of the Bitcoin 4-year cycle begins with an accumulation phase. This is after Bitcoin bottoms out during the bear market and creates a base. This is the consolidation phase or accumulation phase where you need to be going in heavy. This is when it's the least risky in the market to buy Bitcoin and cryptos. Bitcoin bottomed out last cycle almost in the 15,800 range. It actually was like 16.3, 16.4, depends on what exchange we're looking at data. But this is after this bottoming happens, and there'll be blood in the streets. People be screaming that crypto is never coming back. But this is the best time to be buying Bitcoin. Now, the next part is when the bull market begins. Okay, the bull market is when, and I'm going to show you some market psychology that I think we're going to talk a little bit about market psychology, and I think it will help explain this a little bit better. But this second part, the bull market, is where we're at right now, and I would say we're more than halfway through it. Okay, and that's just my opinion, so don't take that as financial advice. It's just something that you should consider in your own investing. At the end of the bull market, we're going to hit a blow off top. And when Bitcoin hits its blow off top, last cycle, that was right, in the upper 60K region, you'll start to see money flow from Bitcoin into Ethereum. And then as Ethereum starts to top out and have its blow off top, then that will start to flow into altcoins. Usually your large caps, like right now, that would be Solana, that would be TONCOIN, that would be AVAX. It might even be some of your layer 2s. And then mid caps and then micro caps. What's been interesting about this cycle is much of the capital we've seen right now has stayed in memes. I don't like that, but I still have to play that in my investing decisions. So after we hit our peak, this is when we have the blow off top. The blow off top, that is what everyone refers to as altcoin season. I experienced last time. I watched my bags 20x, 30x, made a little bit of profit. but a lot of it I held until I lost most of my gains and even lost some money. Thank God it helped me a little bit on my taxes. So when you get to this part of the cycle, the blow off top, altcoin season, this is not the time to be positioning. This is the time to be selling. And that's not what you're going to hear on YouTube. That is not what you're going to hear on X. Everyone's going to be screaming. There's so many people, buy, 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 buy. Even the people you trust. Again, crypto rule. Don't trust. Verify. Okay? Don't trust. Verify. Now, during or after altcoin season, this is when the bear market begins. There's going to be a massive correction of Bitcoin. Bitcoin during this time corrects 60 to 80%. Altcoins, they correct 80 to 99.9%. Some of them will never make it back. So during this blow off top, during altcoin season, even beginning during the peak, begin taking profits. Always take profits. If you do not take profits during the last phase of the cycle, the market will take them for you. The market will take them for you. I can't stress that enough. Now, why do I believe in this this 4-year cycle theory of Bitcoin? Why do I believe in the 4-cycle theory of Bitcoin? Well, part of it, it's my investing strategy. Historical evidence from all previous cycles followed the 4-year cycle theory. So far, it has not been disproven. Until it is, I will continue to abide by it. The second thing is supply and demand dynamics. When you halve the emissions, it's gonna affect supply. As demand rises, supply goes lower, price goes up. It's that simple. It's the same thing I talked about as an educator teaching economics. If there's too much supply, price goes down. Think about the government printing more and more money. Supply goes up, price goes down. Supply goes down, price goes up. It's that simple. But looking at the Bitcoin and crypto market cycles, we also have to take a look at market psychology. And the market psychology very much can follow the 4-year cycle theory. Also, now, all markets have a cycle. All markets follow market psychology. Now, what varies is how long that cycle lasts. So this is the Wall Street cheat sheet. And this is what one of the things I want to end on. And it's the psychology of a market cycle. You will see this. You could literally put Bitcoin's 4-year cycle over this chart and it will follow it pretty dang close. This would be the bottom of the bear market, right? Disbelief. That's the beginning of the bull. You consolidate, right? We're beginning right now. I believe we're either here or here, but that's in the almost optimism phase. People are thinking, hey, this is real. It's the bull. We're about to go, but we haven't gotten to that blow off top yet. So last cycle, I got in during this thrill phase. Last cycle, I got in during the thrill phase. I rode it all the way up to euphoria, all the way down to capitulation. Okay. Now, once you hit capitulation, eventually we'll hit the anger range. And when we are in anger, this is when you need to be going heavy into the market. This is when we need to be dollar cost averaging into our convictions and, if nothing else, into Bitcoin. And the reason why is if you look at this, right? If you buy in the bear market, that would be the trough. That is your point of maximum financial opportunity. You need to be buying when everyone thinks you're an idiot and they're all selling in fear. And likewise, the peak, is the point of maximum financial risk. You shouldn't be buying at the peak, at the euphoria. You should be selling. Now, what this brings us to at the end is why the 4-year cycle theory is so important. First and foremost, it can guide us to making better investment decisions, if nothing else. So I hope that this has been informative, and I hope you enjoyed the discussion on the four-year cycle theory and why I believe it to be important for any investor within the crypto markets. But at this point of the live stream, I wanted to take some time, to look at some liquidity pools and to look at some altcoins. So I'm going to go into my trading view, and we are going to look into well, one of the first ones I wanted to look at today, since we already looked at TONCOIN, is Solana. Everyone's so excited about Solana. And it's kind of been the large cap altcoin of this cycle. I would, for any beginning investor in the crypto markets, the first three coins I'd probably recommend would have been Bitcoin, Ethereum, obviously, and then Solana. Kind of the same thing with liquidity pools. The majority of my liquidity pools are in Ethereum, Bitcoin, Solana. I got some in a few other things, but that's the majority of it. Looking at Solana, it's looking so strong. And just like Bitcoin, we're about to reclaim the bull market support band on the weekly. What I would like to do is bring up the stochastic RSI, because when that blue line crosses the orange line, we know we're about to go up, and we did July 1st. We've had a nice couple of weeks of going up on that chart. And what I've done is taken, some of this has been even more aggressive if you had positions in Solana beta plays like with the meme coin on Solana, the number one meme coin on Solana, or Render token. Actually, it has not performed well lately, but that is where I like to keep a lot of my kind of AI integration play money in Render token. And Solana is just looking so strong. Now, could Solana dip back down? Yeah. If I go to the daily chart, right, we're above the bull market support band, but easily Solana could go back down and test it. That would put, in the 160 range. So right now, my Solana liquidity pools are, I put the range between 160 and 190, 195. You could go up into the 200 range, but I think we'll hit some resistance there. So can collect those fees and also enjoy exposure to Solana. Let's take a quick look at another one that I love to look at, and that's AERO token. AERO is part of the Aerodrome ecosystem, which is the largest DEX and liquidity provider on the on the base network. I'm going to take this one off. So we're going to take a look at Solana, we're going to take a look at Aerodrome, and on the daily, it has looked awesome. We were adding to a lot of our Aerodrome and Ethereum liquidity positions, and the beefy position we had, not all the way down here in the 40-cent range. I wished, I'll be honest with you, but definitely adding a lot around 60, 55 cents in that range. So we're sitting pretty. When that happens, I usually take a little bit off the table, especially with my altcoins, and then I put that money into stablecoin, either into stablecoin liquidity pools, or I lend it out, so I can earn a little bit of yield on what's just sitting there. Right now, I actually like to use extra finance on base network and liquidity pools through Beefy, but that's what I do. But Aerodrome is all the way back up almost in the dollar range. Now, in the last day, we have dipped a little bit from about 105 to 93 cents. and today we're down a little over 2%. But this is a project, I know everyone is concerned about AERO's inflation rate. I know people are, but people were using this DEX. And if you look back in previous cycles with DEXs that were popular, for example, Uniswap, and the amount of volume that comes in during the blow off top of the bull run, I just don't see where this is a losing bet. But when we get to that point, I'm going to be selling most of my AERO. I'm not locking it up for voting. I'm definitely not doing that. And sometimes I even convert my rewards to USDC. There is a lot of selling pressure on this token, so that has to be considered. Now, the final thing I wanted to look at today during this live stream is a couple of liquidity positions. So what I'm going to do now is go into, let's do Crystal first. I'm going to go into Crystal Finance and show you a couple of my positions on the Matic network. So this is just one of my smaller positions. My Matic to wrap BTC is just get back into range, which is awesome. This one has been a money maker, although most of my fees I have put into different positions. So I haven't compounded the growth back into this one. But right now I have about $1,000. I've generated about $60 of fees. Yes, my P&L is negative $51, and that is because of what I have in the Matic token. I am okay with that because I believe Matic is going to do fine once the bull run continues. And so what you're seeing down here is I'm using a rebalancing strategy. I don't want to get into all the details of how I do that yet, but this is a pool that I have kept some money in Matic to wrap Bitcoin. And then whenever I have a little bit extra, I throw it back into this one, which is my link wrapped Ethereum pool now. This one has been pumping over the last day. And if we look at the 7-day chart, it's been pretty consistent. Now, if I go to 30 days, there is going to be a big dip because there was a big dip in volume in the market, but that's okay. Now, this position alone, I'm up about about $16. My 7-day APR on this little tiny, just under $650 position is almost 40% in 7 days. It's crazy. And then as the assets appreciate in price, the fees go up too. I love this stuff. Let my crypto make a little extra crypto for me, right? That's why we do liquidity pools. All right. I got one more thing I wanted to look at the very end, and that is a Solana liquidity pool that I have over on Radium. Radium is a DEX on Solana that I like to sometimes participate in their concentrated liquidity pools. This one right here is actually, it's a little under $800. There's a lot of volume on the Solana network today. Like right now, the APR is about 208%. That's nuts. That's awesome. So we're earning a little bit of yield. This is since last night. It's made about $5. By the end of the month, this position, these two positions in a month will easily pull, $100 to $175 a month, depending. And all that yield I can put back into stable coins and save for a drop, or I can add it to my Solana bag. I can convert it over, buy some JLP token, and invest it in Jupiter's perpetual money market, which is earning ridiculous percentages right now. There's so much more you can do in decentralized finance that we can do than we can do in the traditional banking system. So I hope this has been a good live stream. I apologize that if you're there, I haven't been able to handle any comments today. I'm having issues loading that in OBS. We'll look into that for next time. And I appreciate each and every one of you. Thank you for your time. If you're watching this later, great. I'll probably have to edit a few things out since my kids wanted to bother me today, but that's part of being a dad. So until next time, peace.